right, guys. So we have about 20 minutes to talk a lot about DeFi and HFT. I'm not going to talk about my project at all, other than the first 1 minute that I'm going to brainwash you a little bit. Just a little bit about me. I'm the CEO of this company. Going to the blog, I'm going to tell you our traction both on analytics and quant trading. I used to be a distinguished engineer at Microsoft, used to lead the quant infrastructure team at DRW, a couple of exits as an entrepreneur. I teach applied at Columbia, and I taught a DeFi class at Wharton this year, so not all is lost for MBAs at Wharton. There is hope, there is hope. And I write this super, I'll say semi-popular AI newsletter called The Sequence with over 120,000 subscribers or so. So ITB, I'll say is relatively well-known in the market as an analytics provider. We have over 250 of the top brands in crypto as customers that use our analytics platform. The thing that not many people know about Into the Blog is we have a division that started last year called, is what we call the DeFi Quant platform, and we're going to show you a few of all the mistakes we make, right? And essentially, we're trying to do quant trading on DeFi protocols, and that went from a few million to over $1 billion in just a year with all the top brands in crypto. So we're sitting between DeFi protocols and the biggest balance sheets in crypto. I'm not going to talk about Into the Blog at all, so two things. If you're a hacker passionate about machine learning and DeFi, let's talk because we're hiring across the board. And if you have cool DeFi protocols that you think can benefit from institutional capital, flowing into those protocols, our clients are sort of, think about the biggest lenders, the biggest exchanges, the biggest market makers are going through DeFi through our portfolio of strategies. Today, in the first year, we put in 50-something in production core and 25 DeFi protocol, deprecated a bunch, so I made a ton of mistakes, but somehow made it. So what we're going to talk about is a DeFi perspective of high-frequency trading. How is this different? I recently published an article in CoinDesk about this and got a ton of hate mail. And, and some of the key building blocks that you think you can build, and some stupid ideas at the very end, some more futuristic stuff for you guys to think about. So speed and trading always gone together. Famous example, right, during the Battle of Waterloo, Nathan Rothschild famously propagated the rumor that Napoleon was gonna win the battle, was able to buy a ton of bonds from the British government and sell it on the news that Napoleon has lost. But it was always a dark area of the market, so it was popularized with Michael Lewis' book about flashbots. This book came out the week that Virtu-Stream was supposed to go public, and there was some hate in the market for this, so they had to postpone the IPO for about 6 months. There is a ton of classic strategies in HFT, index arbitrage, things like event-based arbitrage, where there is M&As and things like that. What stock do you go long? Which one do you go short? Basic statistical arbitrage. Things like low latency strategies, but the markets, traditional capital markets have become so efficient that it's just hard to discover alpha and as HFT. So HFT in traditional capital markets is all about speed, which is sad. I mean, it's boring as hell, or it used to be before machine learning sort of, came back with a renaissance. But if you're working in HFT, I hope I'm not offending anyone, but if you're working in HFT in traditional capital markets, it was all about being faster and having better infrastructure. DeFi is the first technological movement in over 20 years that just challenges that, right? That brings a new infrastructure that you need to build from the ground up. So if you're doing HFT in Coinbase with Bitcoin, and doing HFT for oil futures is pretty much the same thing from a quant perspective. So the models, they don't look that different. But when you look at DeFi, that's a brand new infrastructure. You cannot reuse any of those models. And that's why we got excited about working in this space, because we don't get too excited about working in the traditional quant models. So when you think a good analogy about this, that is one that we think sort of works. So when the markets became electronic in the early 2000s, there was what today is known as the Chicago School. There were a bunch of hackers that figured out how to connect to exchanges, how to understand those protocols. At the time was really low level and really, really difficult. And that from there you have jump trading, DRW, Hudson River trading. Two Sigma came a little bit later, but sort of the same mindset. Since then, every single technology movement in capital markets have been incremental. Nothing has been completely transformational, not even Bitcoin or Ethereum, right? So DeFi is the first thing in which you cannot use infrastructure for traditional HFT trading. You need to build from the ground up. So so when you think about other technology movements, so things like dark pools and all that was basic increment over traditional infrastructure. And DeFi sort of is the first movement that challenges that. And the opportunities in DeFi, because it's growing so fast, it's so inefficient and so asymmetric in terms of information, the opportunities for alpha in HFT are massive. That's going to go away eventually, but today are tremendous. So the thing that you need to know about DeFi is that it's not about a speed anymore. And when we started working on this, we tried to come up with a framework, try to understand like why is it really different in DeFi than in traditional HFT, and we came up with a number of factors that we think try to summarize that, and I want to submit those to your consideration. So the fact that you cannot go faster than the block time, the fact that everything is visible, what you do and what your competition do, the fact that there is cost in the form of gas and things like that, the fact that miners are a hidden participant in the ecosystem, and then the dependencies that you take on protocols. So let's look at each one of those. So in traditional HFTs, you can go as fast as your infrastructure allows you to do, right? You can have better networking capabilities and things like that and be super fast. In DeFi HFT, you have a factor that is a block time that doesn't allow you to go that fast. So that means that if you're formulating a trade and you do your calculations in milliseconds, well, your competition still has a few seconds to figure it out because you cannot go faster than a block time. So that's what faster blockchains are very good for preventing MEV, because the speed is a factor that sort of mitigates that. So this is one that drives me crazy, right? Transparency is great in DeFi, but when you think about it from an HFT perspective, it's super cool that you can see what your competition is doing, which in traditional markets you can, because market makers hide that from you. But your competition can also see what you're doing, which kind of sucks. So it's a game of perfect information now. So you submit a trade, somebody can see it, try to replicate it, and because it's not like super fast, they have time to formulate trade. So it's complete different dynamics from a game theoretic perspective than traditional HFT. There is also this thing called this cost factor that is not very common. So in traditional HFT, your cost is pretty much fixed. You can extrapolate, you know how much you're going to pay for networking, the connectivity to the exchange and all that, and that's not going to change. It doesn't matter what trade you formulate. It's very easy to forecast. But in traditional, in DeFi, the cost of gas, particularly in the Ethereum blockchain, is crazy, right? So you have trades. We have stories of trades that we were formulating the perfect trade. We had one competitor, so nobody else was competing with us but one party. And block by block, we were losing money because we were beating each other so high in so many trades in a single block that we end up losing money. So you have this factor that is variable and is difficult to account for. And then finally, the MEV factor. So this, again, is something that you don't deal with in traditional capital markets. You have the miners that obviously they have a lot of control in terms of how do they order transactions in a block. And if they become very active participants, they can affect the outcome of any trade, meaning you can have the perfect trade submitted, but if you're not positioned in the right place in the block, you're screwed. Does that make sense? So a way to think about this is traditional HFT, you have a good idea, you're fast, you're good. In DeFi HFT, you have a good trade, you still need to deal with all this other crap, right? You need to deal with miners, with costs, with the fact that everybody's seeing what you're doing. Another way to compare this is from the information perspective. Traditional HFT is imperfect, right? So you don't see what market makers are doing. You don't see parties of the system. In DeFi HFT, it's near perfect. So DeFi is like Go, traditional market is like poker. In terms of cost, traditional HFT is fixed. You can extrapolate how much you're going to pay for tracing fees and all that. In DeFi HFT is completely variable. Speed, you're talking in one market about nanoseconds. I hear multiple seconds, and you're fine to formulate a trade. And then you're taking external dependencies in HFT and minor on protocols and other things. So what we learned in the last year is that better infrastructure trumps better trades in DeFi HFT by a mile. So you give me a good infrastructure with some components that I'm going to show you now, and you can formulate a strategies upon a strategies upon a strategies rather than having the perfect strategies and a very mediocre infrastructure. So one of the key some of the key building blocks that we learned that we had to build and put a ton of work on this and made a ton of mistakes. So obviously monitoring mempools, right? So the idea that the more things that you can do at the mempool level for HFT strategies, forecasting the state of transactions and things like that, technologies like block native and things like that help a lot in this space, particularly for the Ethereum blockchain. If you go into other blockchains, different game. Heuristics for accumulating gas. That's a heat map that we actually published in ITB. So this idea that you can accumulate gas when it's cheap, because when you really need it to bid in a gas world, you need to be able to spend that gas. So being able to accumulate gas on a specific times a day when you know that the cost is less expensive is super important. This is particularly important in gas bidding, to get rid of front runners and things like that. If you're doing trade in AMMs, you're gonna get front run, or at least some bots are gonna attempt to. So there is a lot of mediocre front runners in DeFi. Hope I'm not offending anyone, and it's very simple. So you bid twice and you get rid of all of them. So essentially, you post a transaction, and there are a couple of bots that are always going to try to front run you. But if you get aggressive on the bidding side, most of what we have encountered, they don't have sophisticated logic to keep bidding and all that, except the parties that are doing HFT for real, that those are the ones that you end up competing very aggressively. There is a trade that I'm going to show you at the very end that does an arbitrage between different AMMs, and we encounter this situation. We have one party that before we got in was clearing about $1 million a week, a little bit south of that. And we're like, hey, this is perfect, that we have the perfect strategy, and our math was, we're gonna split it in two, right? We're gonna make 500K a week. Well, we end up making 0 a week, both of us, because what happened is that we were beating each other all the way to lost money multiple times during a block. So you need to factor in all those things. And what fixed that trade for us was integrated with private pools. So at some point, we started going to private pools directly, and this is where ArcherDAO was starting with the Flashbot guys was starting. So we started working with them, and we figured out a couple of things there that actually made that trade work. Before doing that, we tried things like obfuscating transaction input. So again, talking about transparency, we were submitting a trade, and they said, look, these guys are doing exactly what we're doing, and putting more gas, and we will put more gas, and they will cancel, we'll cancel. And so at some point, one of our engineers was, well, let's obfuscate the inputs of the transactions, and now they're not gonna be able to read what we're doing. We did that, and they were still reading what we're doing, and then we figured out that they were replaying the transactions of chain, which is another building block that is necessary. So you use clients like Open Ethereum. You can take transactions on the mempool, replay, forecast the state of the blockchain a few seconds before it happened, and try to formulate trades according to that. So other relevant building blocks, there is a lot of things that you can derive from centralized exchanges, particularly with options and things like that that are interesting. I didn't put protocol integration because it's sort of trivial, but integrations with a ton of protocols, because many of the best opportunities in DeFi HFT are combinations of several protocols as well as across several blockchains. So let me show you several trades. Some of them are not very viable anymore, but still the idea is super cool. So this trade, this AMM arbitrage trade, essentially you're monitoring mempools, and you're forecasting, you're replaying the transactions and forecasting the state of different pools and trying to identify imbalances. But instead of trying to arbitrage the imbalance in a single pool like most front runners would try to do, what you do is you find a path across different AMMs. It's a graph algorithm essentially across different AMMs that tells you the optimal path to maximize a gain and minimizes slippage. You submit that trade, you start monitoring the mempool again, there comes a front runners, you do your couple of bits, get rid of them, and if anybody else sophisticated have seen that trade, they're gonna try to compete with you. And that's sort of this is the one that we lost a ton of money until we figure it out. There is this idea of, in UniV3, because it changed from passive to active market making, there are ideas of trying to supply liquidity. So one of the challenges of HFT in DeFi is that we haven't found many opportunities that you can deploy hundreds of millions of dollars. It's all like a small amount. This is one that has a ton of capacity. So if you have a large pool of capital, you can monitor the mempools in Uniswap v3. If you're able to forecast, this is an open secret. If you're able to forecast what's the volatility of the pairs that you're playing with, you can try to supply liquidity within that threshold. The problem is that if you miss it, the impermanent loss will kill you. So the model that we found that works at best is we have a volatility forecasting model that uses some deep learning stuff. And it tells you volatility on the pair plus minus certain percentage, not direction, no, it's not gonna go up or down, it's gonna vary by 3%. And then using that, you supply liquidity on different ticks. So you say, well, between this price and this price, I'll put 20 million. Between this one and this one, I'll put 10. So to try to spread the surface a little bit, that seems to work. Then another one that is kind of cool, I hope that none of you guys have any of you guys built a DeFi index in the past? They all suck. And because they all suck, there is a ton of arbitrage opportunity. So this is the stupidest trade ever. This is a traditional ETF to underlying asset trade that doesn't work anywhere but in DeFi. So essentially, you monitor a mempool, you forecast the state of the transaction, and then you're gonna see based on that which DeFi indices are mispriced. There is always one of those that is mispriced because they all suck. So you buy one, sell the other, and that arbitrage kind of work, and that's not gonna go away when the indices get better. And then there is a ton of opportunity in CeFi DeFi, ARPs today. It's just hard to build. Like you need a ton of connectivity and a lot of things to build that. So now this is what you can do today. I want to leave you with two ideas of how the future of this could look like. There is one that is an obsession of mine. It goes like this. So in machine learning, in deep learning, in the last decade, we have seen techniques like, start with techniques like reinforcement learning, that is what DeepMind used to build AlphaGo, that bit Lisido in Go, and then evolve with techniques like self-supervised learning that have been pioneered at Facebook. Essentially, techniques that can look at a bunch of data that is not labeled, it's not super high quality, and infer knowledge from it. In the case of reinforcement learning, it's trial and error. In the case of self-supervised learning, it's developing representations of the world, either or. In DeFi, everything is visible. And today, we formulate strategies by the traditional way of our data scientists and team coming up with ideas and backtesting and all that BS. Could we have algorithms that looks at everything on the blockchain and learn strategies organically? This doesn't happen in traditional capital markets because you don't see the market making leg and a bunch of things, but in DeFi, at least seems to be theoretically possible. We try a bunch of stuff there and nothing works. If not, I wouldn't be calling it future. And then there is this idea of tokenized HFT strategies. So we have products at White-Earn that have tokenized passive strategies. So why don't tokenize active strategies? So there are projects like CoinFlex that have created stablecoins that do the basis trading behind the scenes. So same idea, but for HFT strategy, I'll supply to a strategy, I get some tokens back, and that strategy is gonna go in and out, and I'm done. Hold on, yes, I'm done. So DeFi, you see? So DeFi, as a takeaway, DeFi represents a new playground for HFT. Infrastructure is key for this, and HFT is a feature, not a bug of inefficiencies in DeFi. It's part of the ecosystem. It's not going away. I published this silly article in Conce a few months ago about this idea, so you can go there and disagree with it. And that's my contact info. And now, do I have time for questions?